Hello and welcome to this week's Profit Maximizer Moment. This show is dedicated to helping business owners dramatically improve their bottom line with our weekly profit maximizing tips that you can use now. I'm your host and coach, Wayne Belisle. I'm also the founder of a local CPA firm that works with business owners to help them make more money, keep more of it from the IRS. I do that with our profit coaching programs and with our tax planning system. That by itself has saved our clients over $6.8 million over the last 5 years, all legally. As I say every week, I love my clients, but I'm not sharing a jail cell with them. In today's video, we're going to learn why every business owner must know their ABCs. I'll explain what that is in a minute. But first, support for today's show comes from Profit Maximizing Publishing, and I have the darndest time putting this where you can see it. I don't know why I struggle so hard with this. Anyways, there. Uh, which published my book, The 90-Day Profit Reset, which shows you how to gain your independence from a reduced cash flow, shrinking margins, and an evaporating customer base. In this book, you will find chapter after chapter, idea after idea about how you can turn around your business, reset your profits from red to black in 90 days or fewer. Even entrepreneurs who are making money now will benefit from my book by learning how to make even more money. Um, Day after deadline doesn't mean diddly squat. I've never had this many extensions in my career. Straightforward, simply, it's been a weird year, and I'm hoping the best thing that could happen is Congress decides not to pass anything else for a little while and give us a little bit of time to catch up. Anyways, I said at the beginning everybody needed to know their ABCs. Last week we covered product costing and why it was important. ABCs is a more advanced version of product cost. The ABC stands for activity based costing. All right. When you've calculated your cost and gross profit for your product, if you do what I asked you to do last week, congratulations. You're simply already in the top 5% of business owners. Most don't do that. Now let's get to the bad news. All right. You've just started. It's easy to make costly mistakes if you don't know the total costs incurred throughout the sale, from taking the order to delivering the product to collecting on the invoice, and actually something I left out of the book that really needs to be in there, any warranty work you might have. So any callbacks, any things that you might have. If you don't know that full cost, you could be losing your shirt. All right. I had a glass install. I'm gonna give you an example. I had a glass installation customer call me because the sales had increased by 50% that quarter, but his bottom line has simultaneously dropped by 25%. Remember what I told you a few weeks back, and I keep repeating it over and over. We're not in the business of making sales. We're in the business of making profitable sales. In other words, we're in the business of making money. Okay. When I did an activity-based costing on his major products, I discovered he'd put a new type of glass on sale that was making his staff that was taking his staff 3 times longer to install. All right. Um, that was important because he was using the normal installation time standard costing method of what it usually took. When we adjusted the labor costs, we saw he was losing about 10% for every sale at the non-discounted price. And the trouble compounded as he was having a 10% off sale, and it got worse because that product that he was losing 10% on, he was losing money on, and losing more because he put it on sale, was actually cannibalizing other business. Another key thing, you have to understand, anything you put on sale is going to cannibalize your other businesses. When I was at Coca-Cola, we dug into this very, very deeply. We did activity-based costing. There's another example I'm going to give you. We have activity-based costing, and we looked at, if we put something on sale, how much did that particular product cannibalize other products that we made more money on. At the time, we were selling classic Coke, the normal Coke, and Diet Cokes. Diet Coke cost us 25 to 50, I can't remember the exact numbers, 25 to 50 cents more per case. And when we stuck it on a sale, it had about a 10 to 15% cannibalization rate. In other words, we sold 10 to 15% less of classic Coke that we were making more money on. Now, seems like everybody would have that, right? Well, Coke USA came and put a deal out that they would, give us 25 cents a case if we sold Diet Coke. And I want to say we were at 50 cents a case because I remember we were still losing money. And we were one of only, out of the group that we were a part of, so a couple, 300 bottling plants across the country, we were one of only 3 or 4 that turned them down When they asked what's going on, we gave them the numbers and said, tell us we're wrong. They never got back with us. So that means less. If you have basic cost data, you're in the top 5%. If you have activity-based costing, you're literally in the top 1% or less of business owners in your niche. And those are two examples of how one, not knowing almost put them out of business. Once we fixed it, they were able to do pretty well. All right, the Coca-Cola one, we literally didn't take a deal that would have cost us money. All right, so how do you calculate activity-based costs? It starts with your sales minus your sales cost. Be sure to include the cost of the time you and your sales staff spend to sell a product, because something new is going to take more time. Minus your advertising costs, minus your delivery, setup, freight, and collection cost. And like I said, make sure you estimate or take a standard of what your callback and warranty work would be. Yeah, ton of work, okay? But it is key to making good profit-based decisions. It allows you to tend to and grow your cash cows while limiting or eliminating those products that add little or no profit to your bottom line. That's another thing. Focus on what you make the most money on. I have discussed that before. Let your competitors focus on the losers. I highly recommend using an accountant to help you calculate your true costs. It always has a positive ROI. I'll give you another example. Every CPA firm does bookkeeping and payroll, just about. We don't do either. When I got rid of those two, our top line went down by $40,000. My bottom line went up by 80. Why? Because I was able to focus on my best customers and on my best products that I have a higher profit margin on. It's that simple. I'm going to keep this one a little bit short because, simply put, I'm tired. I'm going to take a break. Actually, going to be out of town for a little while. Um, Call action this week. I'm going to call you to action by saying, with inflation costs increasing both labor and material costs across the board, it's not just something nice to put you in the top 1%. It's literally vital that you always know exactly what your profit margins are from start to finish, activity-based costing. At a bare minimum, do what I talked about last week, which is costing, typical cost accounting. And truthfully, in an uncertain economy, this can be the difference between survival and failure. And be frank about it. The people I'm working with and talking to you, I hope we're not just aiming for survival. I mean, I'm hoping we're working to build a highly successful business. Hey, thanks so much for listening. I'll see you next week with another profit maximizing moment. And let's keep working to make the next year your most profitable year ever. Thank you very much, and have a good week.